So, Bismillahirrahmanirrahim, Assalamu alaikum, and good morning. I have the pleasure of moderating this first session, and for some time we have been thinking of doing some evidence-based research on what we feel is happening in the industry or not happening in the industry. And I was very glad to see that our best supporter and key colleague, Susan Dingwall from Norton Rose, took it as her mission to do something serious about it with all the obstacles and problems of getting responses and replies from different players in the industry. We wanted to see what is it that stops Islamic finance assets being insured via Takaful. Are there reasons for it? Are there any issues which are there which we can address so that we can close this gap between Islamic finance assets going to non-Takaful insurers, which is really not closing the circle properly? So Susan and her team have done questionnaires and got responses and analyzed and put together something which may be of interest to all of us, I hope. And that is why we've decided to give it prominence, so that before all of you get tired with other things, you put this in the front of your mind and keep thinking about it for the next 2 days. So may I call upon Susan Dingwall to make her presentation, please.
Thank you very much indeed, Iqbal. And I'd just like to add my congratulations to him for achieving a 10th summit. It's an absolutely wonderful achievement, and more power to his elbow to do many more of these. I'd also like to introduce my colleague, Martin Schneider, who's been invaluable in terms of helping with the survey that we've carried out. You may recall that from previous summits, the focus of our talks tend to be very much on legal topics and also regulatory developments. But for this year's summit, and particularly given the theme of the summit, we decided to do something very, very different. We wanted to look at how buyers of commercial insurance products perceive Takaful and see whether those perceptions match up with our understanding of the challenges that the market faces from a demand perspective. Now, I should confess right up front that we're not Ipsos Mori, we're not a market research firm. But we have been reaching out to our clients and our contacts in the Muslim world, and with the help of Iqbal, we were able to survey a range of corporates in a number of jurisdictions and across a variety of industry sectors, and to get a sense of their use of Takaful products. And we've managed to come up with some interesting results. The key finding from the survey is that there is a mismatch between the use of Islamic finance and the use of Takaful. Also, in line with what we discussed yesterday morning and in the masterclass in the afternoon, and also at these summits previously, we saw the evidence of the need to educate the market and to offer a wider variety of Takaful products. And I'll come back to more on this later. In the meantime, I'll hand over to Martin.
Thank you, Susan. Good morning. So I'm going to start just by giving you a bit of information about the about the participants in our survey. What we intended to do really was to try and get participants or respondents from the entire Muslim world. So we spoke to heads of risk and chief financial officers at entities in the Middle East, in North Africa, and in Southeast Asia. And what these maps demonstrate or show is sort of the percentage spread across those different regions. I don't know if it's particularly clear, but you can see that the highest concentration is in Saudi Arabia, the UAE, and Bahrain, with some participation in Morocco and Egypt, and then we got responses as well from Southeast Asia, so Malaysia and Indonesia. I think something that we will be focusing on in the future is to try and increase that concentration of participants in some of the regions outside of the Middle East, because obviously their participation, particularly Malaysia, and the new market, a growing market in Indonesia is vital. But I think this particular concentration reflects our particular contact base in the Middle East, but also I think has to do with time zones. We're obviously based in London. When we were talking to people in the Middle East, it was a bit harder to talk to people who were somewhere between 8 and 10 hours ahead of us. Turning to the nature of our participants on the basis of annual turnover in US dollars, you can see that the largest concentration was in large entities, so entities with a turnover of over 750 million US dollars, with small and medium-sized entities representing the other approximately 54%. Although there is a larger concentration of large entities, we don't think that the small and medium enterprises were underrepresented in our survey. In terms of industry sector, we tried to obviously get a diverse range of industry sectors to participate. I think the fact that we have a nearly 50% concentration amongst financial services entities, I think reflects the fact that, again, our contact base is largely financial services based, but at the same time, we spoke to a number of industrial conglomerates with diverse divisions, and many of them will have had asset management, investment, or banking branches, which I think will have upped that particular percentage. Again, something to work on in the future for us is to try and push the percentage of industry sectors beyond financial services a bit higher, so we get a more diverse range of responses, and obviously address classes of business that the financial services sector won't necessarily take out. Now, getting to the core questions of the survey, and really the whole purpose of it, the whole essence of it, we first asked our participants to address key question, obviously, which is the starting point, is do you purchase insurance against business-related risks? And as you'd expect, the vast majority do buy commercial classes of insurance. Then, again, key question, do you purchase Takaful to cover business-related risks? And as you can see, only 30% of those surveyed told us that they purchased Takaful products, which obviously indicates that there's some work to do in terms of market penetration across this particular segment, and something that we're going to explore in the next few slides, and Susan will go on to talk to a bit later, is really the reasons for the lack of engagement in this particular area. Now, this slide shows the take-up of specific Takaful products or particular classes of business by those of our respondents who do take out Takaful. Again, this is in part shaped by the composition of our survey sample. As I said before, it's 50% is financial services, but nonetheless, you have some results there which are unsurprising. Group health at 57% of respondents, property and business interruption, again, not unexpected. These are quite mature classes of business. There's relatively high market penetration, and you would expect entities in these regions to take out that form of Takaful. At the other end of the scale, you have cyber, and no one takes out cyber amongst our survey base, at least. Again, unsurprising, because I think it's an emerging risk, and worldwide market penetration is obviously relatively low still, and it's something that people don't quite understand as a part of insurance. What did surprise us a little bit was the relatively low percentage of take-up of Takaful products for group life and group motor, given that, again, these are quite mature classes of business, and we would have expected a higher take-up. So just to give some clarity, in case you can't see, group health is obviously on the left, and then we've done it, we've sort of grouped it going down in terms of take-up. So group health, directors and officers liability, and property business interruption are the first three, and then machinery breakdown, again, quite a surprising one at 36%, is the fourth in line. Now, this slide here, we asked this question of all respondents who purchased business-related insurance, to try and get an idea of whether respondents constructed their entire insurance program out of Takaful. Clearly, the majority of businesses surveyed use conventional insurance, either exclusively or in place of Takaful for certain forms of cover, which I think is unsurprising, given that, in terms of classes of business, Takaful hasn't got that sort of widespread availability that conventional insurance does. In the next slide, perhaps, which might be a little bit confusing, but I'll try and explain it, sets out the specific forms of cover that those respondents who purchase on a conventional basis, and comparing that to the types of Takaful policy that purchased and that I showed you on the last slide. So the columns on the front row represents the take-up of conventional insurance products, and then behind that we have the take-up of Takaful, which is the slide I showed you earlier. Again, not necessarily particularly insightful slide, but I think what you can sort of see is that there's a general trend, apart from a few anomalies, including airport liability. We obviously only had one or two airports who exclusively took out Takaful products in respect to their liability, but generally you can see that the take-up is relatively similar across conventional and Takaful products. Now, in terms of getting an idea of attitude towards Takaful, we wanted to find out, whether our survey respondents would actually prefer to use Takaful. And again, the response was predominantly that no, and obviously we go on to explore why that is. Why would they prefer to take out conventional in respect of their risks rather than Takaful? That's almost 2/3 saying no in this instance. And then, so the next question we asked them was why? And we did this by offering them a number of responses, and they could choose all of them or a small set of them. And the next two slides will set out sort of the answers, as well as the particular percentages of those respondents who responded to a particular answer as to why they didn't want to take out Takaful instead of conventional. And at this point, I'll hand over to Susan to discuss those particular responses.
So we asked the reasons for not purchasing Takaful, and we grouped the answers that we received into 4 categories. The first is product-related issues, second, education, third, competition from conventional insurance, and lastly, Sharia compliance or prudential issues. And while there was no one reason which seemed to dominate, a number of issues identified clearly resonated with the respondents to the survey. In particular, the absence of appropriate Takaful products appears to be an issue, with 23% of the respondents highlighting that this is something which stops them from replacing conventional insurance with Takaful. And further, 18% of those surveyed thought that there were capacity issues. Also, product education and marketing appears to be a challenge, with 23% of the respondents saying that their broker has never raised the possibility of purchasing Takaful for the risks in question. 14% were also unsure what benefits they would get from purchasing Takaful over conventional products. A further significant issue which appears to prevent respondents from seeing Takaful as a viable solution is pricing, with 23% of them stating that Takaful products were uncompetitive in relation to their conventional insurance cousins. 9% also thought that conventional insurance providers offered a better claim service than Takaful providers. As to financial strength of Takaful providers, this appears to be less of an issue, with only 14% saying that the credit ratings of Takaful operators are inadequate. And very few indicated that the Sharia board did not require them to purchase Takaful. So lastly, to put this survey in some sort of context, we asked our participants in the survey to state whether they made use of Islamic finance solutions and indeed whether they invested in Sharia-compliant investments. And as you can see, 98% of them were involved with Islamic finance, and 76% of them took out Sharia-compliant investments. So it's clear from these responses that there is a sizable gulf between the utilisation of Takaful and other Sharia-compliant financial services or products. So just drawing things together in conclusion, while our survey was a relatively simple one, it hopefully does provide some insight into the mindset of corporate insurance buyers. And there's clearly an untapped market out there, but buyers need to be persuaded that, firstly, Takaful solutions exist, and secondly, that they are a competitive proposition in comparison to conventional products. Now, hopefully, the developments and the initiatives that we're going to be discussing over the next couple of days here in London and also on the ground in local markets will lead to greater education and a more extensive range of products, which would strengthen the message that Takaful is indeed a viable risk management tool for corporates across the Muslim world. Thank you.